Good morning. Welcome to the Brew. Today's Friday, and that means Paulina's with us from CNBC. And we're going to talk about three topics today. Retailer Target misses earnings, Alphabet and the Department of Justice, and big retailers are getting bigger. Let's get to all this and more after the bell. Ride my horse. God, that is such a Yellowstone. Do we pay for that?
I know. Can I tell you that I did ride horses in England at a castle? Like that just happened to me a month ago.
You wore the fancy English style horsey outfit, where I would be the cowboy kind of dude.
Yeah, that's what I'm used to riding. My dad's
I have my Western wear on. Yeah,
that's where I'm from. So yeah, English saddle, totally different. Okay,
Paulina, do you ride horses?
No, I've ridden a horse when I was a little girl, but I haven't ridden one since. I'm kind of nervous to ride a horse, to be honest.
Yeah. So I always tell my family that I should have been a cowboy, and they always say, "But, Dad, you don't like horses." I go, it's a minor technicality of being a cowboy. I don't like the poop and all that stuff and cleaning it. I don't want to pet a horse. I don't want to brush it. I just want to ride it once in a while.
I think at age 10, my dad sat me down to show me how to roll a cigarette with one hand while you like reins in the other.
Yeah.
That was what I grew up on.
I like riding horses. I just don't want to take care of them at all. No part. Anyway, so when I opened, I said, Paulina from CNBC. Is that okay to say, by the way? I mean, technically?
Yeah. Of course, it's okay to say it. I feel like it's not. It's
very like you need a hair flip on that. Like, I guess it's okay.
Yeah, I mean, Paulina gives a hair flip too. So okay, because I said it the first time. Wait a minute, I don't ever say that. I just said CNBC. Anyhow, you are with the CNBC and Kramer, so that's good news. Yeah. Let's get to it because I know you've got something to get to here. So retailer Target misses earnings again. I forgot to read that part. What's going on with those little bastages?
Yeah, Target has been a tough retailer to own once again for its third quarter. It missed expectations across the board. Sales were down, really below the forecast that Wall Street was expecting. And as a result, the stock dropped, 21% following the earnings announcement. So it wasn't, just like it really missed expectations. It was some of the categories that didn't perform well were the home goods category, and that's important because it's a key profit driver. And there were other higher margin segments that didn't perform well either. So it was a tough quarter for Target. And this is difficult because Target is one of the major retailers, of course, in the US. And this is happening while its competitors like Walmart are doing very, very well. So it seems like its competitors are gaining more share of sale increases while Target is not able to get that.
So what are they possibly missing? Because we're going to talk about Amazon, Walmart, Costco in a second, right? Or a few minutes. They're seems like they're killing it. What are we missing? I kind of used to like Target. I think they did something stupid and woke that really pissed me off, and I stopped going for a little while. But I'd go back again if I had to. I mean, it's kind of a cheery place, and they have great male products.
Do they?
They get good stuff for your face and your beard and that kind of stuff, and better shampoos than average places. But what do I know? I just like going there for that stuff. But
go
ahead. Sorry, Mom.
No, go ahead. Like,
no, I was just gonna say, I wonder. I can't figure out what they missed because I got to be honest. I'd rather go to Target than Walmart. Just saying.
I'm gonna second that. You know what they are doing too is they're investing in AI as far as like automated checkout and inventory management. So is this one of those where they sync it so that people can climb in and then they're going to announce all that? I mean, it's out there.
That could be. It's a good point, actually. I didn't think about that. I like that idea.
Yeah,
so they have a little buy-in loss leader for now, kind of lay the groundwork, the foundation, and then the margin efficiencies come because
I mean, these guys do the best in high inflation. But the other thing is if people are anticipating inflation leveling out, then these might take a hit. Plus, the competition of the companies we're about to talk about. So
yeah. Any other thing you could think of, Paulina, that's causing this that we're missing?
Yeah, absolutely. And we'll definitely get into it as we talk about the other three retailers, but Target is really missing the mark when it comes to providing value to its customers. So it's been scrambling to do a lot of stuff. It's been trying to cut prices, using pricing strategies to attract more of those lower income cohort. So it's been trying to do that, but it hasn't been able to compete with the everyday low price model that Walmart has successfully implemented and executed there. And there's been a shift from consumer spending behaviors toward essentials, which was a major hit for Target's higher margin categories like home goods and apparel, which is more of a discretionary category rather than a consumer staples category. On top of that, Target had a lot of inventory challenges, and that led to a lot of markdowns. And when you have slower markdowns, that means the profits are much more thin. So it's a lot of operational efficiency issues, cost management issues, and so forth that Target is not able to execute on.
I gotcha. That makes sense, though.
Yeah.
I do find, Mal, I don't know how you feel about this, being a chick. I find that Target seems more upscale than Walmart to me.
I'm sorry. Are you referring to Target?
Yes, Target. Yes. Okay.
I would agree.
Do you agree with that? I mean, I find that
agree.
The brand quality at Target's better.
Yeah.
But Paulina, I think, is saying, well, it's the non-essential part that's not working for them because Walmart really excels there, and I totally get that, right? I'm not going to be too brandy when it comes to, my medicine or something like that, I suppose. Yeah. So be it. But I totally understand that. I think so.
Yeah, I would say Walmart has more of a broader appeal, whereas Target, it does have some of those higher and more expensive brands that gear towards maybe a higher income cohort, which may not be friendly to a wider audience that is not able to reach those higher price points right now, and that could definitely be an area that's causing Target to struggle.
Okay. All right, I looked at the time. We got to move along because our gal Paulina, she's got more important things to do. All right, just so you know, Mal, we met in person.
I know.
We got some things going on here. Okay, Mal?
It's cocktail hour somewhere. We know where you really live.
All right, let's move along to Alphabet stock. Terrible week with the Department of Justice. What do they call it? What happened here?
Yeah, so the Department of Justice, they are ramping up their antitrust fight against Alphabet parent Google. And one of the remedies that they have for Google being a monopoly, they ruled that Google is a monopoly in their advertising business. One of the remedies for that is divesting their Chrome browser. So the government is pushing for that change. And, that could essentially limit how we use Android and AI. So it could have broader implications for the people like us. We use, I use Chrome pretty much every day. That's how I search. But that's one of the remedies that the DOJ has put forth in order to minimize the competition from Google.
Okay. Do they own ChatGPT as well? Is that theirs? I forget. The OpenAI.
Microsoft owns OpenAI's ChatGPT.
Why do I always forget that? But when you search on Chrome, you get an or that must be their Gemini. That's
DeepMinds. Yeah. So Google has DeepMinds, which Elon Musk has been vocal about. A little dangerous that union occurred.
Yeah.
So that's something to keep an eye on.
Okay. So where is this? Is the government going to break them up? They're going to make them do this, or is this just still at the trial phase or whatever you call it?
Yeah, so these are just the remedies. Alphabet can propose, they can do the appeal, but the judge is going to move forward with the continuation of the case in April in 2025. So investors, They are, this is more of what they call a regulatory overhang on the stock.
Yep.
So it is a risk, but it's going to be a trial that takes multiple years to eventually, close. So it's not kind of like there's not going to be any short-term remedies.
Which the irony of that, which is hilarious, is that Sam Altman, who runs OpenAI, he's stated that AGI, which basically is when AI surpasses us, is here next year. So by the time any legislation happens, who knows? Elon anticipates our next presidential candidate will be
well, I was going to bring that up too. Isn't the Donald going to be a little softer on this massive regulatory sort of thing? Does this get kind of swept or not really? Too big of a deal?
Well, so that's one of the arguments, that with the Trump administration, he might have a lighter, more lenient hand on the big tech companies, or because we're in a critical time when it comes to AI innovation, and also for national security issues when it comes to competitiveness from China. Yep. But at the same time, he has made comments in the past about Alphabet, about if there are anti-competitive issues, then we need to be more fair rather than split the company and make them divest and so forth. So it's kind of like a wait and see scenario on this.
Okay.
And
so sorry, Mal, go ahead.
No, I mean, at Mar-a-Lago for Thanksgiving, I mean, Elon's sitting to his right, so he's in his ear, and Elon is definitely about regulation. So he originally co-founded OpenAI, and it's meant to be nonprofit open source, and that is now not that. So I anticipate regulation coming and this going through.
You do?
Yeah.
Okay.
I do.
Would you, either of you, if you owned Alphabet or Google, whatever you want to call it, would you sell your shares, or would you hedge them to for their downside move? Any thoughts there? Again, not investment advice. It's just an opinion.
Yeah, go ahead, Paulina.
So with this regulatory risk, and given the stock has provided a lot of return for investors over the past few years, it could be a time to secure some gains after that big run. But if you have conviction for Alphabet over the long run, then I wouldn't sell your entire position. But yeah, you could hedge it by maybe securing a gain and then maybe using those gains to buy into another exciting stock.
Yeah. Is it GOOG or GOOGL? Which one is it? Is it?
I follow the GOOGL.
Oh, okay. I'm looking at that. They have to kind of be sorted together, right? Yeah, they are. Okay.
This is where let's keep an eye on time. This is where how you invest is almost like your vote. So if you're for a quick turnaround and for returns, then I'd hold, because you can't go wrong with AI stocks. But if you're thinking about where AI is headed for the human race, I might support those that are concerned with that truly. And I would back humanists. And so that might be something like Grok and anyone associated with that. Right. Although there's that Neuralink component, which, that opens a whole can of worms about transhumanism and all that. So it depends. I think the thing that we're all waking up to is where we vote. It drives how things will look for us 10 years from now. Yeah. So it depends what you're after. But
here's what I do. Ready?
Yeah.
Okay. I'm looking at it. It's over 5 years. I just picked 5 years randomly.
Yeah.
163% to the good side. That's huge.
Yeah.
I think what I would do is I'd put on a collar. What a collar is, long put, short call. I do it for zero cost. I keep playing the upside, and I give back some of my 163%. And I don't know what number yet. I probably give back 10-ish% off the top of my head. So I'd only be up, a lot.
So you're owning the house, and you're collecting rent, and you have house insurance. I love that.
House insurance. I got it all covered. So
I love it.
All right. Make sure you message me on the details of that collar. Okay. If you want to know about that. Lex@tradier.com. I love giving my email out. It's like giving It's like giving your cell number out. Don't call me on weekends,
dangerous.
but here's
Oh
my
my
cell number. I'm not giving you my cell number. I'll give you my email. So if someone wants to learn more about that, send it.
Right.
All right, we got to get moving. Paulina's got to go. Ready? Number 3. Big retailers are getting bigger. Amazon, Walmart, Costco. I know that to be a fact. I know why it is. I love Amazon and I love Costco. I don't like Walmart so much, and I don't mean it's not. It's a great company. Good for what it is. I just like the ease of Amazon. It is right here, and I just got back from Costco about 15 minutes ago before the show. I got my stuffed peppers for dinner tonight. So take that, Paulina. Take that and tell me about those places.
Well, I just think it's incredible because we talk about tech and how much the sector has ran this year.
Yeah.
And retail, on the other hand, has been a struggling sector, but these 3 stocks have been outperformers. Walmart year to date, 72%, Amazon up 29%, a little, faltering compared to Walmart. Then you have Costco year to date up 46%. It's $964 per share, Costco. So it's inching to $1,000 per share. So Morgan Stanley, they came out with a note to clients last week, and they assessed the landscape of the retail environment, and they found that these 3 retailers, they're getting even bigger. So they found that they are taking 50% of incremental retail sales from both e-commerce and in stores. So I thought that was pretty impressive. And why is this happening? And we kind of alluded to it earlier, and it's about value. So Walmart has been able to capture more wallet share of different income cohorts, particularly the higher income consumers, through its Walmart Plus membership. Obviously, Costco has the Costco membership. It has, different tiers. Amazon, of course, you just mentioned it, Lex. It's all about convenience with the Prime membership and their ultra fast delivery speeds. Right. So all these retailers have value in common, and that's why they're winning.
Yeah. So what is Walmart's symbol? Oh, WMT, is that it? Yeah, Walmart. Sorry. I'm looking them up as we speak. So, okay. So which one of those 3, Amazon, Walmart, Costco, has had the most exorbitant growth over the last 5 years? Would you guess? You might, Paulina, you probably know, but so Molly, what would you say?
Well,
Paulina, go ahead.
Come on. CT scan.
Over the past 5 years. So I think I'm going to say Amazon, but that's only because Amazon is like 5 companies in one.
Yeah. It's not Amazon, at least according to Yahoo Finance. Hold on. Okay. Want to guess again? You know.
I want to say Costco.
Bingo. Costco. 225%.
Wow.
That is amazing.
Yeah.
I love Costco.
Yeah, Costco's really great.
I love it. I go there. Sometimes I go there when I don't have to go there because I like getting behind all those slow people in the middle of the lane with their big carts, and they don't move over to the side, and I can't get around them because I walk fast. So I love that part. And I just find that they've laid out that store so well. And the reason is that little treasure hunt thing they do. All the new stuff's in the front of the store when you get there, and it kind of winds around for your first few paces. And you get to go up and down a few aisles to get the new stuff. And then they got, the paper towels and all that crap in the back and coffee. And then I go to the checkout. But by the time I get to the coffee, I've already spent $300 in my cart. I had $300 worth of shit in my cart. It's unbelievable. So I think it's classic. I just think it's awesome. I really do. I love it.
I always walk out with 10 books I'll never read.
Oh, see, I only read on the Kindle. Oh, yeah. Amazon. I only read on the Kindle.
Right.
Convenient.
Hey, by the way, I just want to CT scan because, that's what I do.
Go.
I always think it's hysterical that we're all talking about, antitrust and who's has the highest growth when you go to Yahoo Finance, click on holders to the left, the majority of these companies are owned by the same people. So interesting. Is it the same company?
Yeah, it's one big company, Mal.
Yeah. And then one question I'll leave you with is,
you know what they're doing? They're in your brain right now taking pictures of everything. Yeah,
right.
That's what they're doing.
Right. Yeah, I know. And so when Rockefeller, ran into the antitrust stuff,
Yep.
Were there benefits for him? Did he make out big on that?
Yeah, he did.
Yeah.
He owned 1 + 1 + 1 + 1 did not equal 4 for him. It equaled 10.
Yeah.
So yeah, that's what's going to happen to these guys too. Interesting though. I like this. When we chat again next week, let's moonshine on this a little bit because I have some other thoughts, but I know you have to go. Great to see you, Paulina. And we weren't on air when we said that we met in person for once in New York City. Molly, nah, you didn't make it.
I know.
We wish you were there. We wish you were there. That would have been great. But it's great to meet you in person finally. We've enjoyed doing this segment with the CNBC star. I can say that now. So.
Hair flip.
So you guys have a great weekend. Go Eagles. You don't even know what the LA teams do, and the Bears suck so bad that I can't even say their name in a sentence. Oh my God. But let's get together next week, and you guys have a great weekend.
All right. Bye, everyone.
Cool. Guys.
Bye, guys.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.